What's up everybody, I'm Jaspreet Singh, and home prices are beginning to fall thanks to rising mortgage rates, but now because people can't afford to buy a home, they're turning to rent, and this is causing some rental markets to skyrocket. The housing market has really been affecting homeowners, first because home prices were growing at some of the fastest rates that we've ever seen thanks to the help of extremely low mortgage rates, and then it was mortgage rates rising when home prices were already at record high prices. Here's what that translates to. In January of 2022, this home might have sold for $500,000, and if you put 20% down, that would be a $100,000 down payment, which means now you can finance the $400,000 at around 3 to 3.5%. Let's just say 3.5% in January of 2022, and this meant your monthly payment was $1,900 a month for this home. Well, between January and June to July of 2022, home prices have grown by about 6.6%, which means that the same home with no additional upgrades, no modifications, is selling for $533,000 in July of the same year, which means that now if you put down 20%, you need $106,000 for the exact same home. However, your mortgage rate is no longer 3.5%. You're somewhere between 6 to 6.5%, depending on all the things that you qualify for. If we just say 6.5%, that means now you're going to be borrowing more dollars at a higher price, and now your monthly payment has gone up from $1,900 a month to about $2,700 a month in the exact same year, just half of 1 year. So we're talking about almost a 50% increase in your monthly costs on the exact same home in half of just 1 year, thanks to these rising mortgage rates. Not surprisingly, people are looking at this saying, I can't afford this anymore. And so people are turning away from the idea of buying a home because of these rising mortgage rates while home prices are at record highs, and now they're turning to rent. And this has shot up the demand for people wanting to rent a home, and this has caused the rental prices to now go up because all these people that wanted to buy a home are saying, well, we can't buy right now, so we're just going to rent. So you had all these people that wanted to buy that are now renting, causing rental prices to go up. Now, this rise in mortgage rates is causing home prices in some markets to drop. We're seeing mortgage demand starting to drop. We're seeing some sellers start cutting the price of their homes. That way they can compete because demand has been falling. But the reason why demand is falling is because now people are turning to rent, which is causing rental prices to rise. Now, one thing that I do want to address when it comes to this situation is you have some people that are very upset because they feel like now that home ownership is slipping through their hands and that they'll never be able to build true wealth or true generational wealth because they can't own a home. And one thing that I want to demystify here is you don't have to own the home that you live in to build wealth. You don't have to own your home to build any sort of generational wealth. You need to own equity. You need to own equity in some sort of investment, whether it's a real estate investment, whether it's a rental property investment, whether it's a stock investment. The real way that wealth is built is through equity in one of these things. That way now you have something that you can live off of, that you can potentially pass down. Yes, home ownership can be a great way for you to own the home that you live in, but it's not the only way to build wealth. And this is where now you have to keep putting your money to work, because if you can't afford to own a home, if you can't own the home that you live in, you still want to be investing your money. That way you can build ownership in something. And if you do want exposure to real estate, then you can check out something like our sponsor Fundrise, which allows you to get exposure to real estate investments without having to own a rental property yourself. Now, the best way to invest in real estate is to go out and invest in a rental property. That is the best way if you want exposure to real estate, to go out and do it, but it takes the most money, it takes the most time, it takes the most effort, and it also takes the biggest headache. However, if you do want to get exposure to real estate without having to go through all that headache, then the next best thing is to try out something like Fundrise, because you can invest your money with Fundrise, and this will give you exposure to some of the most prime time real estate in America. Now, I do have to give you a little bit of a disclaimer because I do have some of my own money invested in Fundrise. I first started off by investing in Fundrise with a $1,000 investment a number of years ago, but I invested in Fundrise, and ever since then I have been making solid returns from the appreciation side and the dividend side. Now, you do got to understand that investing has risks, that you're never guaranteed to make any money when you invest, and when you invest in Fundrise, you're now getting exposure to real estate and the real estate market. The nice thing about investing in Fundrise is now you get exposure to real estate without having to deal with tenants, without having to deal with property managers, without all the headache. You have the expert investors and developers that are doing the work. You get cash flow because if you invest in good funds, then they will pay you quarterly dividends as well. And you can also set up a dollar cost average system where every month now you're investing more money into real estate, which has never really been a possibility before, where you could just dollar cost average your money into a real estate investment, but Fundrise allows you to do that. So if you want to learn more and see how you can start investing your money in real estate with something like Fundrise, I'll put the link to how you can learn more and get started down in the description below. At this point, you're probably saying, but Jaspreet, why would you want to buy a home or buy real estate right now? Because when you have mortgage rates going up, naturally home prices are going to have to go down. We're already seeing people cutting the prices of their homes, and you're right. If mortgage rates keep going up for 6 months or 12 months, you're going to have to see price cuts because people just won't be able to afford homes anymore. However, you're missing one key factor there, because that assumes that mortgage rates will continue to go up. Because right now, the Federal Reserve Bank is saying that they want to fight inflation. That means that they want to continue raising interest rates in the effort to fight inflation. However, we're also starting to see now that the economy is slowing down. You're starting to see more worries about a recession, not just from random guys on YouTube, but from people on Wall Street, from economists, from the Federal Reserve Bank. And so people are starting to get worried about a slowing economy and by potential unemployment numbers going up. And people are worried about this economic slowdown now potentially affecting the Fed's fight on inflation, because if maybe 6 months down the road, maybe 12 months down the road, I don't know, if people get worried about this recession more than inflation before the inflation fight is solved, well, then the Fed could switch their fight. In fact, they could start cutting interest rates now to help boost the economy, which would help the economy boom. It would cause home prices to rise even faster. It would cause asset prices like stocks to boom again. However, it would come at the price of inflation. This is where you do not want to be in the business of trying to time the market, because while you can understand the economic factors and you can understand the financial factors that are happening in the markets, the one thing that you cannot predict is what the government and the Federal Reserve Bank are going to do. And those things that the government and the Fed do, what I call the X factor, these things can have a huge impact on your investments. This is where instead of trying to time the market, you want to be looking for the right opportunities. So if you're trying to buy a home, don't try to time the market. Don't worry about mortgage rates. Don't worry about what's going on. Find a home that you can afford. Find a home that you love. Find a home that you want to create memories. And if you can afford it, then go out and buy it. If mortgage rates continue to go up, well, at least you hopefully locked in a mortgage rate. But if mortgage rates get cut, well, then you can just refinance and now get a lower mortgage payment because you refinance to a lower rate. If you want to invest in real estate, same thing. If you want to go out and buy a rental property, don't try to just time the market, because if the Fed starts cutting interest rates, well, home prices could crash upwards, not downwards. Because if they start cutting interest rates, people are going to want to get out of the dollar. They're going to want to buy homes as fast as possible, and that could cause home prices to skyrocket upwards. However, if the Fed stays true on their fight to inflation and they keep raising interest rates, then yeah, you can expect home prices to go down. But we don't know what the Fed is going to do. This is where it's very difficult to try to time the market. And instead of trying to do that, you want to make sure that whatever it is that you're buying is a good investment today. So when I invest in real estate, the thing that I'm looking for is a 7% cash on cash return on my money. So if you're looking for an actual property to buy, you got to figure out what kind of return you want. If you invest $100,000, how much cash you need to get back. Now, of course, investing in real estate is very capital intensive. You can use something like our sponsor Fundrise if you don't want to go out and buy a whole rental property yourself. But this is where you have to understand that you can't just perfectly predict the economy or the markets, because there are some factors that we unfortunately don't have any control over. On the rental side, if you've been looking for a home to rent, chances are you've probably seen rental prices go up pretty much across the board, and it's going to continue going that way until we see a shift in either demand or supply, until we start to see more homes or rental properties, apartment complexes be built, or until demand starts going down for rental properties. You're going to continue to see rent prices going up, which is why you really want to be not just a consumer but a producer. That means investing in real estate. That way you can get a piece of the upside, because the reality is, in this economic system, the people who get benefited the most are the people who understand the system and the people who are the producers. People who are investing their money, they own some of the means of production. That way now you can get some of the benefits. Now, back in the day, this used to be very difficult to do, because it was reserved for only the high net worth people. But the reality is now, thanks to the help of technology, thanks to the help of different investments, and I'm not just talking about real estate, I'm talking about stocks as well. It's the same concept where now you need to own some of the equity that we can get a piece of the upside, because the reality is the system is built to benefit those who understand money. It's built to benefit those who are investing their money. It's built to benefit those who are producing, not just the people who are consuming. And if you don't understand this, you are going to continue to get screwed over by the system, which is why you have to start understanding this, get financially educated, and put your money to work. That way you can start being one of the people that's being benefited by the system, because the reality is this is how the system works. Most of us are never taught this, but this is how it works, and you can either understand it and use it, or you can get abused by it. If you enjoyed this video and you want to see why some people say that our housing market is worse than 2008, I made a video explaining exactly what's going on, and you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. Everybody thought home prices could never go down, so banks were literally giving you free money to go out and buy a home because everybody thought home prices could not go down.